What if you could buy a piece of a company and have it settled in your account in seconds, not days? What if the stock market never closed, allowing you to trade anytime, day or night? This isn't some far-off sci-fi fantasy. It's happening right now in Europe. A revolutionary financial experiment is underway that could completely reshape our reality. They're testing a new breed of digital security. For our purposes, let's call them pilot tokens, and they could be about to change how you buy and sell everything from stocks to bonds, forever. So, what exactly are these pilot tokens, and why is this experiment a genuine glimpse into the future of finance? To see where we're going, we first need to understand the creaky old system we're using now. When you buy a stock, it feels instant. You tap a button on a trading app and boom, it says you own the shares. But behind the curtain, a surprisingly slow and complicated process is just getting started. Welcome to the world of T+2 settlement. The T stands for the transaction date, the moment you hit buy. The +2 means it takes 2 whole business days for the stock to officially become yours, and for your cash to officially land with the seller. For 2 days, your money and shares are trapped in a kind of financial limbo, caught in a tangled web of middlemen. Just think about everyone involved. Your broker, the stock exchange, a clearinghouse that acts as a go-between, and a central securities depository, or CSD, which is like a giant vault that holds the master record of who owns what. Each step adds time, cost, and risk. It's a system built on decades-old plumbing, designed for a world of paper certificates and 9 to 5 business hours. This old-school structure is why the market has to close. It needs to shut down to catch its breath and sort out all the day's trades. It's why you can't trade a stock at 10 p.m. on a Sunday, even if massive news breaks. The system is reliable, sure, but it's rigid. It was built for an analog era, and in our 24/7 digital world, it's seriously starting to show its age. For years we've just accepted this as the cost of doing business, but what if we could build something better from the ground up? This is where the European Union's ambitious experiment comes in. It's officially called the DLT pilot regime, and it kicked off on March 23, 2023. Now that name sounds incredibly dense and bureaucratic, but the idea behind it is simple and powerful. It's a regulatory sandbox. Think of a sandbox as a safe, controlled environment where innovators can test new tech without being held back by all the old rules, but still under the watchful eye of regulators. It's like a special test track for a futuristic car. You can push it to its limits, see what it can do, and figure out what new traffic laws you'll need before unleashing it on public roads. This sandbox allows financial firms to experiment with distributed ledger technology, or DLT, the tech that powers blockchains, and the futuristic cars being tested on this track. Those are the pilot tokens. So, what is a pilot token really? It's not a new crypto like Bitcoin. A pilot token is a traditional financial asset, like a share of stock or a bond, that has been reborn as a digital token on a blockchain. Think of it as a digital twin or a digital deed of ownership for a real-world asset. The stock is still a stock, but its ownership is now recorded and managed on a shared, unchangeable ledger. The EU's pilot regime creates the legal space for these tokens to exist and be traded, offering temporary exemptions from old rules that were never built for digital assets. So, how does turning a stock into a token fix the problems we talked about? It all comes down to the technology. In a process called tokenization, you take a traditional asset and create a digital representation, a token, on a blockchain. This token holds all the information and rights of the original asset, and its rules are programmed directly into it using something called a smart contract. The blockchain, or DLT, acts as a single, shared, and tamper-proof record book. Instead of a bunch of middlemen, each with their own separate records that need to be painstakingly matched up, everyone involved in a trade is looking at the exact same universally trusted source of truth. This one change makes a world of difference. First, and most importantly, near-instant settlement. Remember that 2-day delay? With pilot tokens, it vanishes. When you trade a token, the asset and the cash can be exchanged at the exact same time in one automated step. This is called atomic settlement. The trade either happens completely or not at all. There's no 2-day limbo, which dramatically cuts risk and frees up capital. Second, 24/7 markets become a real possibility. Blockchains don't sleep, they don't take holidays, and they definitely don't have business hours. This infrastructure could allow for continuous trading, letting you react to major news the moment it happens. Third, it makes owning a tiny piece of something incredibly simple. While you can already buy fractional shares, tokenization makes this process fundamentally easier. A token can be effortlessly divided into microscopic units. This means you could one day own not just a fraction of an expensive stock, but a tiny piece of a skyscraper, a famous painting, or a multi-million-dollar venture fund. It could truly democratize access to assets that have always been out of reach for the average person. By cutting out the middlemen and automating everything, this tech promises to slash costs and boost transparency, with every transaction recorded on an unchangeable ledger for all permitted parties to see. It's easy to write this off as just another niche tech trial, but the DLT pilot regime is being watched very, very closely by the biggest names in finance. While uptake was slow after the regime launched, momentum is building. As of late 2025, several DLT market infrastructures have been formally authorized. This includes CSD Prague in the Czech Republic and firms like 21xAG in Germany. These aren't just small startups, they are the pioneers of new financial plumbing. 21x, for instance, launched the first fully regulated DLT trading and settlement system in the EU in September 2025, proving that significant financial activity can run on these new rails. The European Securities and Markets Authority, or ESMA, is actively reviewing the pilot. On June 25, 2025, it published a report that acknowledged growing interest and recommended changes to make the regime more attractive and functional. This shows that regulators aren't just sitting on the sidelines. They are actively learning and paving a path to make this a permanent part of the financial world. And this isn't just happening in Europe. The move to tokenize assets is a global race. From the UK to Hong Kong, similar pilot programs are exploring everything from digital securities to digital currencies. What we're seeing in Europe is a foundational step, a structured, regulated attempt to write the rulebook for a tokenized future. Of course, the road to a fully tokenized financial system is full of bumps. The ESMA report from June 2025 highlighted a few key hurdles the pilot has already exposed. First, there's the challenge of interoperability. How do you get these new DLT systems to talk to the traditional financial infrastructure that still runs the show? And how do different blockchains talk to each other? These are massive technical puzzles that have to be solved before this can go mainstream. Second, there's the problem of cash. For a trade to be truly atomic, you need a digital version of cash that lives on the same ledger as the tokenized asset. The pilot has run into issues with limited access to central bank money in a digital form, the safest kind of money for settlement. This has forced an urgent conversation about using tokenized commercial bank money or even creating central bank digital currencies, or CBDCs. Finally, there's the regulatory puzzle itself. The initial rules for the pilot, like limits on the value of securities that can be tokenized, have been called too restrictive by some, which likely contributed to the slow start. Regulators now have the tough job of tweaking these rules to attract more participants without compromising investor protection. The pilot is a success not just if the tech works, but if it teaches us how to write smart, effective rules for this new world. So, what does this all mean for you? The DLT pilot regime and these pilot tokens are much more than a technical test run. They are a live-fire drill for the biggest upgrade to our financial plumbing in a generation. The transition won't happen overnight. The pilot is a multi-year process designed to answer the hard questions before this technology goes mainstream. The lessons learned from these early experiments will shape the rules, the tech, and the very structure of our markets for decades. The ultimate vision is a financial system that's more efficient, more transparent, and radically more accessible, a system where value moves as frictionlessly as information on the internet. Pilot tokens are the pioneers in this new world. They are the first generation of regulated digital securities, and the data from their life cycle, how they're issued, traded, and settled, is priceless. They are building the blueprint for a future where you might not just trade stocks, but fractions of skyscrapers, royalties from a hit song, or a stake in your favorite sports team, all with a click, settled in an instant. This isn't just about making the old system faster. It's about building a completely new one. So, what does this all mean for you? The DLT pilot regime and these pilot tokens are much more than a technical test run. They are a live-fire drill for the biggest upgrade to our financial plumbing in a generation. the transition won't happen overnight. The pilot is a multi-year process designed to answer the hard questions before this technology goes mainstream. The lessons learned from these early experiments will shape the rules, the tech, and the very structure of our markets for decades. The ultimate vision is a financial system that's more efficient, more transparent, and radically more accessible, a system where value moves as frictionlessly as information on the internet. Pilot tokens are the pioneers in this new world. They are the first generation of regulated digital securities, and the data from their life cycle, how they're issued, traded, and settled, is priceless. They are building the blueprint for a future where you might not just trade stocks, but fractions of skyscrapers, royalties from a hit song, or a stake in your favorite sports team, all with a click, settled in an instant. This isn't just about making the old system faster, it's about building a completely new one. And that brings up a fun question. As this technology matures, almost any asset with value can be tokenized. So, what asset would you like to see tokenized first? A collection of classic cars, a blockbuster movie, your local sports stadium? Drop your ideas in the comments below. And if you want to stay ahead of the curve on the future of finance, make sure you're subscribed with notifications on. Thanks for watching.